Welcome back, folks. All right, so we are looking at the dollar index. I want to have a short discussion today, and I promise there won't be any need for road snacks. This isn't going to be a long video. In the past, you've heard me say those types of things, and it's turned out to be epic, long, 90-minute, 2-hour long types of videos, but it's not going to be that today. So I want you to listen to me, and as I speak, when I say certain things that are critical, I want you to write this down in your study journal. And if you don't have your study journal available right now, pause the video, go grab it. I'll wait. All right, so you should have your journal in hand, and in a section that you could title Market Correlation. Now, this is important to know before you really get into SMT. Okay, SMT is Smart Money Technique or Smart Money Tool, where we look at cracks in correlation. The beginning blocks of understanding, if you will, of market correlation starts with this lesson here. Okay, because if you don't understand this one, everything else will mess you up. Okay, so it's important that you understand what I'm going to teach you here. When we look at the markets as a whole, it's important to know that when markets are in a trending environment, that means the market is symmetrical. That means dollar goes down, foreign currencies go up, and the leaders outperform on the upside and the laggards outperform on the downside. There are times when, for instance, the dollar index will enter into a consolidation. Now, when will a consolidation generally occur, or when would you anticipate a consolidation forming? After a trending environment like we've had here. Prior to this trending environment, what was taking place? Consolidation. Prior to the consolidation, what took place? A trending environment to reversal. Prior to the reversal, what was taking place? Trending. Prior to that, what was happening? A reversal. And then we had another consolidation area. So the market moves from consolidation to trending or expansion to potentially reversal or new consolidation. So when we move to areas where there's likely to create a period of consolidation, as we have mentioned, or I have mentioned, where we are presently trading, nothing terribly has happened on the upside or the downside in the dollar index. Now, it doesn't change the likelihood of finding short-term intraday scalps or day trades. I'm not suggesting that at all. I'm just stating that we're not likely to see this type of event where it's one-sided because we've already been doing that. And now we moved into an area of consolidation. That consolidation is when sentiment builds. Now, inside of those periods of consolidation, and I use the dollar index primarily for this reason, I want to know where it's likely to create a stagnant market condition where it stays in a predefined range. And what we've seen here is pretty much that. It hasn't done a whole lot. When we go back to all of the archives in my commentaries, and when I say that we're likely to go into primarily a day trader or scalper's environment, it's because of this very thing. Okay, that being we're in a large consolidation or a prolonged period of consolidation where it's staying inside of a range. And it's important not to try to force an opinion that is overly bullish or overly bearish while in this environment. So we wait for more information, more movement, displacement, and then once that occurs, then we can start to trade with a directional bias that's prolonged and not just a one-shot, one-kill intraday trade. Okay, we want a weekly range expansion that kind of gives us a little bit more momentum, where we can work with a little bit larger, I guess, range in terms of pips and get outside of those 5-minute and 15-minute charts. So when we have periods of consolidation, or we anticipate periods of consolidation, this is where, now this is important, this is where you will see crosses be manipulated. And what do I mean by that? When we're in consolidation like this, that means that one currency will be allowed to move more than another. Not because we're in a trending environment, but because we're in a consolidation environment. So the range-bound consolidation, it's typical for the central banks to keep one currency in consolidation or hold it and allow another currency to go up or down, or vice versa. One currency could go one direction and the other currency go the opposite direction. It's rare, but it happens. All the while, the dollar index stays in consolidation. So this is one of the hardest market environments for new traders to grasp, and it takes at least one calendar year to see where, when I call it, it is outlined, and then you see it more or less form in your own charts. This is the benefit of being under the wing of a mentor. Now, there's other people out there teaching other schools of thought with trading. And while I don't personally think that they are on the same level of what we do here, the time element you spend under the tutelage of a proven mentor is valuable. It's invaluable, actually, because you're able to get that person or that mentor's perspective based on a number of years, hopefully a long period of time, not just recently starting and learning from someone else like myself. You want to have someone like me that has had multiple decades of being able to do this and see it and have experience looking at it, forecasting it, and having my hands in it for a number of years. In these consolidations, when we enter these periods where I state that it's a day trader's market, okay, or it's a scalper's market, whenever you hear me say those buzzwords, all right, I want you to think about what I'm talking about in this video here. This is when the crosses get manipulated. That means one pair is allowed to move and other pair may not be allowed to move. It'll be held in a holding pattern. And a perfect example of that would be why and how we use the euro pound. Now, I already know some of you are going to say, well, can you start talking about the euro pound? No, I'm not going to do that. I do mention it in Twitter. That's why it's important to follow me there, because I will draw your attention to it when it's salient there. All right, so if you look at the euro pound, all right, so here's euro pound, consolidation, and then it's allowed to move. Consolidation, then it's allowed to move again. When the market is in consolidation, this is like a green light for this cross to start having movement. And usually either euro will be held in consolidation and cable is allowed to move higher or lower, and or euro is allowed to move and cable is held in consolidation. Either or creates the intended outcome for this pair. The easiest way to understand this is euro is the first in the currency's name and British pound is the second. So if we think that the euro dollar is likely to go up while we're in an overall consolidation period in the marketplace, like for instance going back to that dollar index, if the dollar is suggesting a prolonged period of consolidation, and in other words a trendless market environment, that means that you need to be paying attention to this cross and crosses like euro yen, pound yen, because the things I'm going to say here are pertinent to that cross as well, because the same theology behind it. But if we think that the euro is going to outperform on the upside while in these consolidative periods, then do we want to be trading cable the same way? No. Do we want to be trading the euro pound pair itself? I personally do not, even though it's always so. Understanding that this pair needs very specific market conditions for it to move in a trending environment. The trending environment occurs in the cross, like euro pound or euro yen or pound yen, when the market as a whole is held in consolidation, and then they start working the independent currencies against another currency. So whereas in a trending environment, all boats rise in the tide, and they all drop in the low tide. Okay, it's just a very simple analogy. When the market's predisposed or symmetrical to promote a trending environment, dollar should be going one direction, and all other foreign currencies should go the other direction, opposite. Okay, that's a symmetrical market. If the dollar is consolidated, that opens the door for a great deal of manipulation. And this is what messes up a lot of traders, because they think it's a trending environment. They look at all these so-called patterns, and I fell victim to that too. Don't think that I was exempt from all that. I did all those same things, and I learned the hard way with fortunes being taken from me and real trading losses. I just got beat up so much. I knew that I had to change things, and what I had to figure out was, when will these crosses start moving, and when do I ignore them? And I don't want to be paying any particular attention to a cross like this, like euro pound, when it's asymmetrical market, because it's that at that time it's going to be held in consolidation, because it's going to be working symmetrically. In other words, euro dollar and pound dollar will be moving the same direction that is opposite to the dollar in a trending environment. But if we're not in a trending environment, now think, this is the big leap in understanding. If we're not in a trending environment, then this pair can act a little bit squirrely. Okay, and what I mean by that, it can manipulate the other currencies that make up this pair. So you want to be studying, does euro dollar or pound have a specific agenda in mind? What's it reaching for? Is there more excitement or energy in one currency versus another? And we recently saw that in the euro versus cable. Cable was allowed to drop while euro was being held in consolidation. So if euro is being held in consolidation and cable is dropping, would that be bullish or bearish for this currency? It would be a short-term bullish. Not as bullish as if euro was going up and cable was being held in consolidation, but it still has the same effect. Now I'll say it again. If cable drops and euro is held in consolidation, that means the difference or the spread between what euro is doing versus the British pound is doing, pound is dropping against euro. So while euro isn't necessarily rising in relative terms, it's higher in performance versus that of the British pound. So therefore it makes this currency pair go up. For new students of this, that's a little confusing. It's weird. But if you ever studied fractions in school, it's along the same lines as that. Okay, so you want to know which one's likely to go up or go down versus euro or pound. And the same thing if we were looking at like euro yen and pound yen, you want to be looking at the relative strength between euro and pound, and then what does dollar yen look like it wants to do. Now you can do it one of two ways. You can just simply look at the commodity futures on Japanese yen and don't even look at the dollar yen pair in the Forex. But you have to look at three markets to get this. But I don't do this every single trading day. The only time I go through this extra step of analysis is when we're in consolidations with dollar, or if we're in periods of range-bound trading. And if that's the case, then and only then do I take my attention to the crosses, because that will tell me what the underlying cross is going, like higher or lower. And by knowing that, I'm not trading this cross. I'm looking at what is it likely to deliver in terms of higher prices for euro or higher prices for cable, or lower prices for euro or lower prices for cable. One of the two. And if I know which one has the more likely release in price and the other is going to be held in consolidation, then I don't want to be, for instance, buying cable when euro pound is likely to go higher and euro's having a hard time going lower, because it's a better short trading pound dollar in that instance. Okay, so I'm going to take a look at an hourly chart. Okay, so here's the hourly chart. Let me scrunch this up a little bit. This is what recently happened in the euro pound. Euro pound came down below these relative equal lows. There was sell side liquidity resting below there too, and it swept that. But then it created equal lows here. The market came back up, rebalanced all of this SIBI, sell side and buy side inefficiency. And then we rolled down, taking out the sell side liquidity below these equal lows here, all below here that was remaining still, and then underneath this low here, back to an order block, which closed in a fair value gap here when we traded to this point. And then we came back and rebalanced to the fair value gap here, and then we have since dropped down again. When we have the euro pound in consolidation like this, okay, when it's in a consolidation like that, that means that you're going to have euro and cable moving in the same direction. But based on what this cross does, you can pick out the relative strength leader on the upside or the downside. So at this point here, when price was below this low down to the order block and it starts to rally, it's reasonable to expect this to occur. You know this. This is reading naked price, and the algorithm will want to rotate back to this fair value gap in the form of a sell side and balanced buy side inefficiency. And you can see the bodies of the candles respecting that single candle's imbalance. That's defined by this candle's low and this candle's high. So when the market rebalances to here, from this low to this high, at that moment, and we're looking at euro pound as the cross, if this pair is suggested to go up until we get to this fair value gap, does that provide a easy scenario for euro to go higher or cable to go lower? And I'll say it again. If euro pound is likely to run from these stops up to a point of premium that rebalances at this fair value gap, while this was occurring here, this run up in euro pound, is that bullish for euro, or is it bearish for pound dollar? It's bearish for pound dollar because we're in overall consolidation. This pair is only showing you the relative strength between euro versus pound. And I'll show you what I mean now when we go to the charts. All right, so here's the euro dollar. Euro dollar shows a bounce in here. And while it did have a little bit of movement on the upside, we want to look at the relationship with that cross euro pound. Remember, we're in a consolidation on the dollar as a whole. The market itself is in a large consolidation. So while this does bounce, the better trade is selling short cable. And I'll show you what I mean by that by going over to cable now. Here's the move in cable. It's clean because you can see the relative equal lows here. And if we take the hourly chart and break all this up in here, even though this doesn't look all that clean or symmetrical, it really is. Watch what happens when we drop down inside of this area or that fractal. I'm going to highlight this area right here. All right, and we're going to drop down into a 15-minute time frame. All right, so here's a 15-minute time frame on the pound dollar. And here's that rectangle highlighting that specific fractal in price. Here's a high, short-term low, retracement back in, optimal trade entry. And then we break down and have an expansion below these relative equal lows where the sell side liquidity would be. Okay, so we do not, again, think of this as a trending environment where it's going to break down and move 500 pips. Okay, that's not how we're trading in a consolidated market. We look for the sell side liquidity. Here's your optimal trade entry. And for our targets, we take our fib down to the bodies. You can see the bodies still respect the 797 retracement level. And here is your projected low at 123.95 and 7 pip bets. And look at the bodies right here respecting that. The close on this candle here comes in at 123.95 and 2 pip bets. So it's only off by a half of a pip. So really nice. It does a little bit more of a tail, I guess you would call that. And then we return back to consolidation again. So what's occurring in here? If you missed the optimal trade entry here, okay, fine, no big deal. You have a fair value gap in here that trades up into there, and then it sends it lower again. So that's a scalp. When it goes below the lows, we know that we're in consolidation. It's going to go back into the range. Once it takes the stops, it goes right back into the range. There's no trending environment. There's none of that occurring. Drop down to a 5-minute chart. You can see the same thing occurring here, just a little bit more information. Relative equal highs. We sweep that. So buy side liquidity is taken. The market breaks down. We have institutional order flow entry drill right there. We trade back into this gap, but we don't need it to completely fill. It's not a liquidity void. Okay, it's just a imbalance that needs to come right back above or equal to this high here. And then you could be short selling there with the expectation that we're going to run below these relative equal lows. Once these lows are taken out here, again, you can see the return back to consolidation. We have a fair value gap in here. And the last up close candle prior to that displacement right there. So if you take the horizontal ray, put it right on there, you can see it bangs right into it. The open on this candle comes in at 124.37 and the high comes in at 124.37. Bingo. And we have a little bit of consolidation in here, and then it finally gives up the ghost and takes out the sell side liquidity here. So when I'm working with 5-minute charts and 1-minute charts, these are the types of things I'm looking at. Even though we're in consolidation, it doesn't negate the potential for a setup. It just means that you have to be a little bit more nimble. And right away, some of you are looking to say, I just wouldn't even trade in this environment. And guess what? That is maturity. There's no reason to think that just because I'm teaching this lesson, it's an invitation for everybody to go in there and start plowing into doing trades. Okay, it just means that it helps you feel more confident about being on the sidelines and sitting on your hands because you understand the environment that we're in. And that's all I'm trying to focus on here, is teaching you with a greater level of appreciation for when we do go into periods where I say it's likely to go into a range and might go sideways, okay, or we go into a day trader's market. When I say those things, that's like a key word, okay, a billboard sign flash, and start watching the crosses because it will give you clues into what direction and what pair you should be trading, because everything will unlock only in those conditions when we're consolidated. When we're not consolidated and we're trending, you don't want to be looking at any crosses because they're going to be held in consolidation while the pairs move in tandem. Okay, so hopefully you found this insightful. I will talk to you on Sunday. Have a good weekend. If you don't catch me on Twitter tomorrow, otherwise I'll catch up with you on Sunday with the weekend edition on ICT Mentorship commentary.